Does Medicare cover Saxenda? And the answer is, unfortunately, Medicare will not cover Saxenda, but there is an alternative way to pay for it. So Saxenda is expensive if you have to pay out of pocket. According to GoodRx, you're looking at $1,300 to $1,600 a month, depending on which pharmacy that you get it from. So $1,300 to $1,600 a month for most people that are retired and living on a fixed income, that is out of their reach financially. So the question is, how are you going to pay for Saxenda? So Medicare will not cover Saxenda or any other weight loss medications. Medicare Advantage plans, there may be a plan out there that may cover some or all of the cost of Saxenda, but you have to reach out to your Medicare insurance agent to find out if there are any plans available that would cover this particular medication. I will tell you that it's unlikely that you're going to find a plan, but they could be out there. So where most people are going to gravitate is using their retirement savings, and that may or may not be a good idea depending on how much money you have saved for retirement, because drawing out $1,300 a month, about $15,000, $16,000 a year, could have a severe impact on your retirement plan. So it's really important that if you are going to start drawing out, is to look and speak with your financial planner to see what the impact of doing that would be. The other option is credit cards. Obviously, that's a horrible idea for the bulk majority of people, because if you're living on a fixed income and you're whacking your credit card for $1,300 a month to pay for Saxenda, you're going to bury yourself in debt very quickly, and it's just a slippery slope that you do not want to find yourself on. But like I mentioned, there is an alternative way to pay for Saxenda, and that is to pay for Saxenda with a reverse mortgage. And there's a couple different ways to use the reverse mortgage, and there's several reasons why you may want to consider getting a reverse mortgage. First and foremost is it could provide access to income tax-free cash, and you could use that money from the reverse mortgage to pay for your prescription. And by using the proceeds from the reverse mortgage, it could help you retain your retirement savings so that you have the ability and the financial wherewithal to be able to pay for future expenses and financial shocks, such as future medical, health care costs, home repairs, things like that are going to cost a significant amount of money. And that's why it may make more sense to use the reverse mortgage proceeds versus the retirement savings, or maybe using them in a combination so that you're better prepared for those financial shocks at some point in the future. The other way that you could use it is to consolidate your debt to free up cash flow. So you could pay off your mortgage or consolidate your mortgage and a car payment and credit cards or other debt into the reverse mortgage to free up enough cash flow to be able to afford that monthly prescription costs. And finally, you could be better prepared for other large expenses during retirement. Again, if you're not depleting your retirement savings, you potentially have those funds to deal with those expenses at some point in the future. So let's take a look at the scenario of Diane. She is 65 years old, $4,100 a month of income. She owns a $500,000 home free and clear, and she has $185,000 in retirement savings. Diane is not somebody that would typically even think about or even consider a reverse mortgage. However, she really wants and needs to lose weight, and she has tried everything to lose weight, the pills, the potions, the lotions. She's tried all the different diets. She's done Zumba, she's done jazzercise, she's done everything to lose weight, and nothing has just ever worked. Now, she could afford the $1,300 a month cost for Saxenda, but it would be really tight for her financially. And as much as she wants to lose weight, she's not quite sure that she wants to be that tight financially, and she really doesn't want to draw down her retirement savings. So Diane gave me a call to look at getting a reverse mortgage. And so came up with a couple different options. Option one would be to draw $1,300 a month from the line of credit to pay for Saxenda. And that scenario is represented by this bar chart here. The blue represents the home value, assuming a 4% appreciation rate, which historically is pretty accurate. Obviously, some years is more, some years are less, but on average, it's about 4%. The orange represents the loan balance. And we can see this loan balance is increasing over time. And that's because of two things. First, as she draws money out of her line of credit, that money then gets added to the loan balance. And so she's drawing over a 15-year period. And so that, $1,300 a month is getting added to that loan balance. The second thing is we are assuming that Diane is not going to be making a monthly mortgage payment because she can't afford to make the $1,300 a month payment, which is why she's looking at the reverse mortgage in the first place. But if she doesn't make a payment, she still has to pay her property taxes and her homeowner's insurance. But if she's not making a payment, the interest in mortgage insurance is getting added to that loan balance. So for that two reasons, that's why that loan balance is increasing over time. The green represents the line of credit. And initially, we can see we're starting off with $149,000. And as she draws from that to pay for Saxenda, that loan or line of credit balance is going down over time. So by the time she's 80 years old, she has about $24,000 left in that line of credit. Now, what's interesting is during this 15-year period at $1,300 a month, Diane would have drawn $234,000 out of this line of credit. And then if we add this last little bit here in 15 years, the end of 15 years, we're looking at $258,000 if she was to draw all that out at once. So how is it possible that she has $258,000 when she's only starting off with $149,000? The reason that's happening is because any funds in this line of credit are actually growing, and they're growing at the current interest rate plus 0.5%. So even though she's drawing that $1,300 a month, the funds that are remaining continue to grow, and that's why this line of credit is expected to last that long, even though she's drawing out $234,000 over that period. So the other option we came up with was to draw $650 a month from the line of credit and just pay cash for the other $650. That has a pretty dramatic impact on what the reverse mortgage looks like over time. So again, we can see the blue represents the home value. Nothing has changed there. The orange represents the loan balance. And we can see this loan balance is significantly lower with this option because she's not drawing as much. And so therefore, not as much is being added to the loan balance, and there is less interest and mortgage insurance accruing on that loan. So if we look at year 10 here, we owe $155. In the previous example, she owed $270. So we're looking at about $115,000 difference in that loan balance by structuring the loan this way. On top of that, we can see she still in 10 years has a $196,000 line of credit compared to $81,000 line of credit in the first option. So again, we're looking at about $115,000 difference between the two options. So again, the reason that this line of credit is growing is because remember, any funds in this line of credit grow at the current interest rate plus 0.5%. So the reason this line of credit is growing is because she's actually drawing out less than the growth that's happening in that line of credit. So even though she's drawing out that $650, that line of credit just keeps getting bigger and bigger because the growth is exceeding what she's drawing out on a monthly basis. And in this scenario, in 15 years, when Diane's 80, she's expected to have $236,000 sitting in that line of credit. And that could come at a time where she may need in-home care. Her health care costs are likely to be higher. she may need to pay for assistance in cleaning the house, or somebody to take care of the yard. All of a sudden she still has a big chunk of money in there, not including whatever is available in her retirement savings. So from this standpoint, she's going to have more cash to pay for those large expenses when they pop up at some point in the future.
So we just saw some pretty good examples of reasons to consider getting the reverse mortgage to help pay for your Saxenda prescription. First and foremost is it could create the ability to actually afford to pay for the prescription. You're not going to get into credit card debt, which credit card debt during retirement, living on a fixed income, is a slippery slope. And then we're also creating flexibility, especially in this example, we're creating flexibility in those monthly mortgage payments. So as we just saw, she has the ability to pay a portion of the mortgage payment or not. She could stop, skip, reduce payments, increase payments, pay whenever she likes. It just gives her a lot of flexibility that any other type of financing is not going to bring with it. So she still has to pay her property taxes and her homeowner's insurance. The other thing is it creates an additional source of retirement funds with that line of credit, which is important beyond just being able to pay for the prescription, because there are likely to be other large expenses that pop up during the rest of her retirement, which could be other healthcare issues or expenses, maintaining her home, long-term care expenses. There's likely to be other expenses that are going to pop up during the rest of her retirement. Obviously, improved quality of life and feeling better, both physically and emotionally. So lots of reasons to consider getting the reverse mortgage to help pay for the prescription, and also reasons to consider getting it beyond just being able to get the prescription.
So you want to see if this would work for you, want to see what your numbers would look like, what your scenarios are, what some different options would look like, and what it looks like over time. Happy to run scenarios, do some forecasting, put numbers together for you, and answer any and all questions that you have about the reverse mortgage. There's no cost to speak with me. There's no obligation to speak with me. I'm happy to put that stuff together for you. Give me a call, and I look forward to speaking with you. Thanks.